Good morning, everyone. So we'll start with the today's webinar. So a very warm welcome to each of every seafarer, respected seafarer. Myself, CA Sachet Agarwal. I'm a chartered accountant and a lawyer by profession. The organization, our organization, SeafarersTax.org, is into filing of income tax returns. File income tax returns virtually. Further, we provide litigation services. So any notices received by a seafarer, we handle them as per the income tax laws. Further, we are into all the taxation queries that a seafarer comes with us with respect to other compliances which are there under the Income Tax Act. We handle them and we file the returns virtually. So what do you mean by virtually? So basically, even if you are sailing on ship, we can still file your returns and there is no requirement to visit the office. Even if you are in any part of the world, we can still file your returns virtually. So that is our specialty. Further, we have been associated with more than 1,000 seafarers, and I have personally filed returns for more than 1,000 seafarers. Also, we are associated with Captain Sanjay Parashar and other RPSL companies, Himachal Seafarers Association, then other such organizations. So this is our brief introduction, and let us start with today's topic. So as everyone know, today's topic is about Seafarers NRI Days and tax planning. So Seafarers NRI Days and tax planning, this is today's topic, and there are further 5 topics that we will cover in this particular topic. So just to give a brief background on the 5 topics that we will cover today. First topic is about how to calculate accurate NRI days. The second topic is what if a seafarer has not completed NRI days in financial year 23-24. So what will be the tax implications in relation to such non-completion of NRI days? If NRI days are not completed, the third topic is how much tax will be payable if a seafarer does not complete NRI days. The fourth topic is what is the cheat code for paying less tax in financial year 23-24. And the last topic that we will cover is what if a seafarer goes outside India for the purpose of vacation or abroad, whether those number of days will be covered for the purpose of calculation of NRI days. So these are the 5 broad topics that we will cover, and what we will do is after each completion of a topic, if anyone has any question, so they can post their question in the chat box, and we will try to take those questions as and when the time permits. And so post completion of this webinar, we will share the recording with everyone so that everyone can take the advantage of this webinar and also share with their friends and refer further if any queries comes up to them. So thank you all the seafarers. It was a amazing and overwhelming response from all the seafarers, respected seafarers, and so let's start with the first topic as to how to calculate accurate NRI days. So if you see section 6 of Income Tax Act, we'll try to cover what do you mean by when a seafarer becomes a resident. So when does a seafarer becomes a resident? We'll first cover when does a seafarer becomes a resident, and then later on go with when does a seafarer is classified as NRI day and a non-resident. So when a seafarer stays in India for more than 182 days in a financial year. Now, what do you mean by financial year? A financial year starts from April and ends in the month of March. So if a seafarer stays in India for more than 182 days in a financial year, he becomes a resident. Now, what do you mean by a non-resident? If you subtract, in a year there are 365 days. If you subtract 365 days from 182 days, it comes to around 183 days. So you need to be outside India for 184 days, not 183 days. Because if you are outside India for 183 days, you will be in India for 182 days and you will be classified as a resident. So you need to stay in India for 181 days and you need to stay outside India for 184 days. And in case if there is a leap year, so financial year 23-24, please remember that financial year 23-24 is a leap year. So in this year, you need to stay outside India for 185 days. 185 days. That is very important. Then only you will be considered as an NRI or a non-resident and your salary will be exempt. So you need to stay outside India for 184 days in a financial year. That is very much clear. Now, if you don't stay, or there is one more, what you can say is, there is one more addition or an amendment to this particular clause, that if you are staying in India for 60 days in current financial year and in last 4 years you are staying in India for 365 days, then you become a resident. So this amendment, so there are two clauses. First is 182 days in the current financial year or 60 days in a financial year, and in past 4 years 365 days have been completed. These are the criteria for completing, for classifying as a resident. So now what if, so there is an amendment in this clause. Is my screen visible? One minute, just hold on. So there is because of Zoho's server issue, my video is not visible, and we are apologies for the non-visible of the video. So I think let's continue with this session. So as discussed, if you have completed 182 days in a financial year or 60 days in the current financial year and past 4 years you have completed 365 days, then you will be considered as a resident. Now this 60 days criteria have been substituted with 120 days if you are a seafarer and having Indian income more than 15 lakhs. So if you are having an income which is more than 15 lakhs, Indian income, not the foreign sailing income. I'm talking about only the Indian income which is there. So if the Indian income is more than 15 lakhs in a current financial year, then you will be, so you have to stay in India. And if you stay in India for 120 days or more, then you will be classified as a resident. So this amendment is being undertaken in financial year 2020, and it's a very important amendment. And every seafarer must take this amendment in their mind, that if you have an Indian income which is more than 15 lakhs, for example, interest or rental income or any other income which is there and which is more than 15 lakhs, then you need to consider 120 days as a criteria instead of 184 days. And you need to sail outside India for 245 days rather, instead of 184 days. So this is an amendment, and a very important amendment, which is being undertaken in financial year 2020. So now, how do you calculate this 184 days or this 245 days that we are talking about? So whether to go based on the passport dates or whether to go based on the CDC dates, whether to consider the arrival dates or departure dates in India or outside India. So there are nuances in respect to this particular calculation, and I'll explain you how does it go about. So when we calculate this number of days outside India, if your sign-on is from India and sign-off is from outside India, or vice versa, if your sign-on is from outside India and sign-off is in India, then you will consider CDC dates. So if your sign-on or sign-off is from India, you will consider CDC dates. And while considering the CDC dates, you will have to take sign-on and sign-off dates as outside India. So for those seafarers who are joining from India and signing off from outside India or vice versa, you will have to consider CDC dates, and you can consider both the sign-on and sign-off dates as outside India. Now, when you are signing on from outside India and signing off from outside India, then in that case, you will have to consider your passport dates and not the CDC dates. So while considering the passport dates, you will have to consider the arrival and departure dates in India. So there are, like, considering the arrival and departure dates in India, there are a lot of challenges and debates which are there as to whether an arrival or departure date can be considered in India or outside India. So to be on a conservative side and to not avoid any litigation in respect to that, it's better to consider arrival and departure dates in India, because a lot of litigations are there in this particular point. So if you consider, so it's important that you keep 184 days. So while calculating 184 days or 245 days, you don't consider your passport and arrival dates. Excluding those dates, you need to complete 184 days outside India. So make sure that you are not in that hassle that you are including arrival and departure dates and then calculating the 184 days criteria. That is very important. So I think we have covered the first topic, and so to summarize this first topic, you need to be outside India for 184 days in a financial year, 185 days in a leap year, and there is an amendment which is there. If your Indian income is more than 15 lakhs in a financial year, you need to be outside India for 245 days. And how to calculate this NRI days is based on if you are signing on or signing off from India, you need to consider CDC dates. And if you are signing on and signing off from outside India, you need to consider passport dates. So this is a summarization of the first topic, and I would pause here. And if any questions are there in relation to this topic, we can take questions and then move on. So you all can post your questions in the chat box, and I'll try to answer those questions. So there are a lot of questions which have come. So I'll take from starting. There is this question: before joining, if we travel to Colombo for a few days and join the vessel at Singapore by flying directly from Colombo, will that be counted? This is from Vineet Malhotra. So this is, I think, the fifth question that we are going to take, but I'll try to cover here also, and then again cover this particular point in the fifth question, that if you are going to Colombo for a few days and on an employment visa, not for a tourist visa, and that is for the purpose of employment, then yes, you can consider that for the purpose of calculation of NRI days. But yeah, I mean, that should not make the authority sound like you are going for purpose of tourist and then flying to Singapore. So if you're going for the purpose of employment, you can take and count those number of NRI days, but otherwise you cannot. So the next question is by Mr. Mohan. Sir, is it possible to kindly share the text of these rules regarding resident? Yeah, we can share you. Also, you can refer the Income Tax Act, Section 6 of Income Tax Act. The next question is by Mrs. Riddhi Banerjee. If I don't have any income in India other than only salary which is in USD, then will I need to pay income tax? So, Riddhi, it depends on whether you have completed NRI days or not. If you have completed NRI days in a financial year and you have earned salary in USD from outside India and from sailing in international waters, and you have received this money in NRE account, then you can there is no need to pay tax on this particular income, because you are a non-resident and you have earned income from outside India from sailing in international waters. So there is no requirement to pay tax on this particular point. Now, there is one question: should we consider both criteria, like 184 days as well as 365 days? So it's a very good question by Mr. Kisalia. So for a seafarer, you need to consider 184 days or 185 days outside India. You need not consider 60 days or 365 days, because for a seafarer, only 184, 185 days criteria is applicable. That's it. There is one more question by Mr. Saurabh. In financial year 2021, I completed my NRI days, but my CA has filed my return as NRI days not completed, so my tax is deducted. How can I get my tax back? So, Saurabh, for financial year 2021, the last date to file returns was July, and you could have filed a revised return by the month of March 22. And by filing a revised return, you could have claimed your TDS or tax that has been deducted. But now currently the deadline has surpassed, and now it is difficult to get that tax that you have paid as a return. So currently it is not possible. If you would have filed by March 22, then you would have claimed that particular TDS. So I think I've answered the questions, and we can move on to the next question, or the sub question which is there. So what if a seafarer has not completed NRI days in financial year 23-24? So if you have not completed NRI days in financial year 23-24, you would be classified as a resident. And as a resident, you need to pay tax. Now, as a resident, what all income would be taxable? So under resident, there are further two categories of resident. So first category is resident but ordinary resident, and the second category is resident but not ordinary resident. So there are two categories. I'll put the short form: resident and ordinary resident, which is ROR, and resident but not ordinary resident, which is RNOR. So when do you fall under either of these two categories, that is ROR or RNOR? So first I'll talk about when are you classified as RNOR. So if you have not completed NRI days, but in the previous 10 financial years, excluding the current financial year, you have completed 9 years as an NRI. If you have completed 9 years as an NRI, then you will be classified as RNOR. Or in previous 7 financial years, you have been in India for less than 729 days in a year. So if you fall under either of these two bracket, that is in 9 out of 10 financial years, you have been an NRI, or in previous 7 years, you have been in India for less than 729 days, then you will be considered as RNOR. And if you do not fall under either of these two criteria, then you will be classified as ROR. Now, why is there such a bifurcation between RNOR and ROR? So if you see, for ROR, your global income is taxable. So whatever income you earn, whether you are earning income from outside India, for example, you have a property in Dubai and you are earning a rental income from Dubai and you are not completing NRI days and classifying under ROR, then that Dubai income would also be taxable. If you have invested in listed stocks in US via Ind Money, that, and you have sold those US stocks outside India, that income would also be taxable. Your salary, which is earned from sailing international waters, that income would also be taxable. But if you see, if you are classified under RNOR, that is 9 out of 10 financial years you are NRI, or in previous 7 years you have been in India for less than 729 days. If you fall under this criteria and you are classified as RNOR, then in that case, your salary income, which you have earned from outside India by sailing in foreign international waters, that is not taxable. So you need to make sure that if in a particular financial year you are not completing NRI days, then make sure that you are falling under either of these two criteria, which is 9 out of 10 years NRI, and in last 7 years you have been in India for less than 729 days. Then in that case, your salary income will not be taxable if it is earned from outside India by sailing in foreign international waters. So this is a very important thing to consider. And if you fall under RNOR, it will be a huge tax saving for you. So I think broadly, and for a non-resident, you know that your foreign income is not at all taxable. Only Indian income, which you are earning from India, which is rental income or capital gains in Indian stock market or mutual funds, sale of mutual funds or sale of shares or sale of property from India, that is covered. So Indian income is always taxable, whether you are a resident, whether you are a non-resident. In resident also, whether you are ROR, whether you are RNOR, your Indian income is always taxable. The only difference is your foreign income taxability, which will be determined based on your classification into these 3 buckets of ROR, RNOR or non-resident. So broadly, we have covered the second topic, and I will pause here. So if anyone has further questions, we can take those questions. So I think there are further questions on the chat box. So there is one question by Mr. Vivek I have signed off and signed on both from India. So here the question comes is where did your vessel sail? Whether the sailing was purely in Indian waters or the sailing was partly in Indian waters or partly in foreign waters. So if it was purely in Indian waters, then you would be considered as a resident. And if it is partly in Indian waters and majorly the sailing is in foreign waters, then you will be considered as a non-resident and it can be counted for the purpose of calculation of NRI days. Next question is by I think the name by Mr. Mani Sagvam. I joined outside India. Then my vessel was sailing in India for 30 days, where my ship was converted to coastal run for tax exemption. Can I include this 30 days or I have to exclude in NRI days? So basically, you signed on from outside India. Then your vessel came to India for 30 days and it sailed in India for 30 days and it got converted to coastal run. So these 30 days, so the question comes here is whether it was converted into coastal run for those 30 days or post those 30 days it was converted to coastal run. So if when you came to India and that time it was converted into coastal run and then you sailed in India for 30 days, then those number of days would be counted in India. But if the vessel was converted into coastal run post completion of 30 days, then you can count this particular 30 days as outside India. Please explain with a date example for arrival and departure and NRI days calculations. So we'll circulate, Mr. Ankit, we'll circulate the NRI days calculator. We are into making of the NRI days calculator and we'll circulate this to everyone once it is done. And you all can take advantage of the NRI days calculator and calculate your NRI days in that particular Excel file. So there is one more question by Mr. Minto David. From what date to what date do the calculations start in a year? Like 1st April to 31st March. Is it right? Yeah, you're absolutely right, Mr. Minto, that the financial year starts from April and ends in the month of March. So you need to calculate the sailing in that particular financial year only. Now, many a time I have seen that the seafarers calculate from the date they have sailed till the date they have signed off. Now, for example, if you joined in the month of January, 1st January, and you signed off in the month of May, 31st May, or for example, 31st October. So if you see the contract period is more than 6 months, but the contract is covering 2 financial years. So you need to calculate per financial year and not a contract as a whole. So calculate from April and then see whether you have completed NRI days or not. Do not see the contract number of days. See if there is a ending of the financial year or a starting of the financial year. So in my example, if you have joined in the month of January, so for example, you joined on 1st January and you signed off in the month of June, that is 30th June. So if you see January, February, March, April, May, June, you have completed 6 months, 184 days outside India as a contract. But still, so this won't be considered for the purpose of calculation of NRI days because the financial year ends in the month of March and new financial year starts from April. So January, February, March is with respect to the previous financial year and April, May, June is with respect to the next financial year. So ideally, if you see from April, May, June, you have completed 3 months as an NRI, 3 months and you have not completed NRI days. So if you see the contract, it is a 6-month contract. But if you see in a financial year, you have just sailed for 3 months and that is not sufficient for the purpose of calculation of NRI days. There are a lot of questions on, I think, the amendment that has been undertaken in 60 days or 120 days. So I'll explain that. So there is one more criteria, that if a seafarer has completed, so if a seafarer is in India for 60 days, or not a seafarer, if a person. So just to give a caution that we'll take the questions, and okay, so a lot of questions are there on 60 days or 120 days amendment. So what the amendment that has been there is, if you become a resident, like any person who has been in India for 60 days in a current financial year, and in previous 4 financial years they have completed 365 days in India, then he would be considered as a resident. Now, if you see section 6(1)(a) explanation, if a person, if a member of a crew of an Indian ship, or if a person is going outside India for the purpose of employment, then in that case, the 60 days criteria would be substituted with 182 days. So that is the reason why this particular 60 days is not applicable to a seafarer. Now, there is one more clause which is there, that if a person comes on a visit to India, then instead of 60 days, 182 days will be substituted. And if that person is having an income which is more than 15 lakhs in a financial year, Indian income more than 15 lakhs in a financial year, then instead of 182 days, 120 days would be substituted. So if you see this 60 days, 120 days, or 182 days. So if you are, for a seafarer, if you are going outside India for the purpose of employment, and you come back on a visit to India, because you are coming back on a visit to India, your house is there in India, your family is there in India, so you will be falling under the second clause, which is coming on a visit to India. And when you're coming on a visit to India, you need to make sure that if you are staying in India for 120 days or more, and your Indian income is more than 15 lakhs, 15, not 50, 15, then you will be classified as RNOR. Not an ordinary resident, you will be classified as a RNOR. And no need to worry, still your foreign income will not be taxable, because for an RNOR, as we discussed earlier, for an RNOR, your foreign income is not taxable. Your Indian income would be taxable. So even if you don't fulfill this criteria, still your foreign income will be exempt. It will be tax free. I think there are a lot of questions on this particular amendment which is there, and majority questions are on that only. And we'll move on to the next. Topic which is there, that how much tax will be payable if NRI days is not completed in financial year 23-24. So if you have not completed NRI days in financial year 23-24, what is the tax? So as we all know that there is an old regime which is there, and there is a new regime under the Income Tax Act. So a seafarer can claim either old regime or new regime, whichever is beneficial to them. If so, under old regime, the slab rates are up to 2.5 lakhs. You don't have to pay any tax. Between 2.5 lakhs to 5 lakhs, the tax rate is 5%. If your income is between 5 lakhs to 10 lakhs, the tax rate is 20%. If your income is more than 10 lakhs, the tax rate is 30%. Now under new regime and under old regime, you can claim all the possible deductions which are there. That we will discuss in the next topic, that what all deductions you can claim in order to save taxes. But under old regime, you can claim all the possible deductions which are there under the Income Tax Act. Now, under the new tax regime, the slab rate is slightly different. Up to 3 lakhs, if your income is there is no tax. Between 3 lakhs to 6 lakhs, the tax rate is 5%. If your income is between 6 lakh to 9 lakh, the tax rate is 10%. If your income is between 9 to 12, your income is 15%. Your tax rate is 15%. If your income is between 12 to 15, the tax rate is 20%. And if your income is more than 15 lakhs, the tax rate is 30%. So if you see under old regime, the 30% tax is on income more than 10 lakhs. And under the new regime, the 30% tax is on the income more than 15 lakhs. Now, under the new regime, you cannot claim various deductions which are there under section 80C, which is with respect to life insurance, 80D, and other deductions which are there. You cannot claim. Now, as a resident, if your income is up to rupees 5 lakhs, as a resident, if your income is up to rupees 5 lakhs, you need not pay any tax in that particular financial year because the government has given a rebate in that year. So I think this was the tax rate which was there. And plus, there is an additional surcharge which is applicable if your income is more than 50 lakhs. So the surcharge of 5% is there if your income is more than 50 lakhs, 50. And plus, you will have to pay an health and education cess of 4% on the tax plus surcharge amount, which is there. And I would request everyone that if you have not completed you are not about to complete your NRI days, you know that you will not sail for 6 months, 184 days outside India, then you should file advance tax, or you should rather pay advance tax every quarter. It is very important to pay advance tax in a financial year so as to avoid any interest consequences later on at the time of filing the income tax return. So advance tax needs to be paid every quarter. Now we will move to the fourth topic, which is cheat code for paying less tax. How will you save tax if you have not completed NRI days? What is the cheat code for paying less tax? So as we discussed that you have not completed 184 days, you become a resident, you will have to pay tax as per the tax rates discussed earlier. Now, how to save taxes? So there are a lot of deductions which a seafarer is eligible to claim, and these deductions are from the income. So for example, if your income is 15 lakhs and there are certain deductions which are applicable to you, you can reduce those deductions from your income and accordingly pay tax on the reduced amount. So the first important deduction that you can claim is under section 80C, which is life insurance premium that you have paid. So life insurance premium that you have paid for self, for your spouse, and for your children. So if you have paid life insurance for all these, you can claim deduction up to rupees 1.5 lakhs. So this 1.5 lakhs, it's a bucket. There are a lot of deductions which you can claim under this 1.5 lakhs. First is life insurance. The second is the housing loan EMI, the principal payment that you make. The principal payment on your housing loan you can claim as a deduction. Then if you are a resident and you have made PPF, Public Provident Fund, as a resident, as an NRI you are not permitted to do PPF, but as a resident, if you have opened a PPF account, you can claim that deduction. There are tax saving mutual funds wherein you can claim deduction. So these are known as equity linked mutual funds or equity linked saving scheme, ELSS mutual funds, where you can claim the deductions in a. So if you invest in those mutual funds, you can claim the deductions under section 80C up to rupees 1.5 lakhs. There is another deduction under section 80CCD 1B, which is National Pension Scheme, wherein if you invest up to rupees 50,000 in National Pension Scheme, you can claim deduction from your income. The next deduction is Mediclaim. So if you are paying Mediclaim or health insurance, if you are making a payment of premium of health insurance for self, wife, and children, you can claim deduction up to rupees 25,000 of the premium amount. And further, if you are a senior citizen, you can claim 50,000 deduction. So this 25,000 gets enhanced to 50,000 if you are a senior citizen. Now, if you pay health insurance for your parents, you can claim a deduction of 25,000. And if your parents are senior citizen and you are paying health insurance premium for them, then you can claim a deduction of rupees 50,000. So this 25,000 limit gets enhanced to rupees 50,000 in a year. Now there is one more deduction, which is if you have taken an education loan and you are pursuing any education, higher education, so whatever loan that you have taken for pursuing this higher education, the interest on that particular education, you can claim deduction under section 80E up to rupees 1.5 lakhs. Further, there is one more deduction. So if you have, in order to encourage the electric car, if you have purchased an electric car between 2019 to 2023, if you have purchased an electric car and you have availed loan in relation to that purchase, then any interest that you pay on that particular loan, you can claim deduction on that particular loan that you are paying, provided the loan is also sanctioned between 2019 to 2023. The next important deduction is on HRA. What do you mean by HRA? Is house rent allowance. So if you are receiving any rent allowance from your shipping company and you are staying on a rented premise and paying rent to the landlord, then you can claim a deduction of HRA. So it's a formula-based deduction that the government has prescribed, and it's a very good deduction. And one more point here is that even if the house is in your parents' name and you are staying in their house and you are paying some amount rent to them, you can still claim deduction of that particular rent, provided you receive rent from your shipping company. So this HRA deduction you can claim. The next deduction, so this is all about the deductions that we are talking about. And so first was 80C deduction, 80D, 80E, 80CCD, 1B. So there are a lot of deductions which are there, and you can claim those deductions if you are making the payment of those particular investments. Now, there is one more debate with respect to whether a seafarer income would be classified as a salary income or it would be classified as a professional income. Because a seafarer goes on a contract for 6 months, 3 months, whatever is the duration, and their income can be classified as a professional income as well. Their income can be classified as a salary income as well. So why I am emphasizing on this professional income is that if your income is classified as a professional income, so there is one section under Income Tax Act, which is section 44 ADA of the Income Tax Act. That is, you can claim a deduction up to 50% of your total salary that you're earning. So if you're earning a salary of 50 lakhs and 50% you can claim deduction. So you have to pay tax on 25 lakhs only. But this is a debatable kind of a thing, debatable kind of option, and this particular option is yet to be tested in the court, that whether a seafarer's income to be classified as a professional income. Because if you see your contract letter, it talks about employment contract. It talks about basic wages. It talks about the leave wages. It tells you about how much number of leaves you can avail. So still the department might argue that this particular contract or this particular sailing that you have done, it's a salary. You are under employment. You are not under professional contract. But the argument in favor is that you are under contract. You are not bound by that particular employment. You can anytime change your contract, and it's a short-term contract which you do, and that's why it can be classified as a professional income, and you can claim 50% deduction on that. So these are all the options which are there for the purpose of saving taxes. And I think the fourth topic is covered. We'll just go through the Q&A session, and if any specific query is there, we can answer those questions. So I think the major questions, one question I'll just take by Rajiv Ranjan, Mr. Rajiv. How to calculate NRI days? What should we do if NRI days not complete? Also regarding up to how much we save under Section 80C. So the 80C, you can claim up to rupees 1.5 lakhs, and your life insurance is covered. Your tax saving mutual funds is covered. Your PPF is covered. The housing loan EMI that you pay, that is covered. So you can claim up to rupees 1.5 lakhs. It's a bucket which is there. There is this one question. I went on holiday in Australia for 1 month. Can I count this period for NRI status? No, you cannot count, because you have been outside India for tourist visa. So this is, I think, our fifth topic that we are going to cover. Let's cover the fifth topic, and then we can move on to the questions that you all have asked. So, can a seafarer stay abroad, take vacation for completing NRI days in financial year 23-24? So, see, if you are going outside India on a tourist visa, visa matters a lot. So, if you are going outside India for a tourist visa, then those number of days won't be counted for the purpose of calculating NRI days, because it is very much clearly mentioned under Section 6 of the Income Tax Act that you need to go outside India for the purpose of employment. That is very much clear. Other than employment, if you go for vacation or for traveling, so those number of days won't be counted. That is very much clear under the law. Now, it is very important for you to justify that this particular days that I have stayed outside India, that is related to my employment. Or so if you can justify, and if you are able to justify to the department, then yes, you can consider. But otherwise, it's very difficult to claim if you are going on a tourist visa. You need to go outside India for the purpose of employment visa. So broadly, we have covered all the 5 topics for today's session, and I think we are on time, and we can move on to the set of questions which the seafarers have asked. If I'm unable to complete the NRI and holding an account in foreign country, possible to transfer the salary next financial year when I'm expecting to complete the NRI? So I believe that here the question is that if I'm unable to complete the NRI, and you are not completed your NRI days in financial year, and you have a foreign account, so you are asking that what if I take my salary in foreign account, can I save taxes? So as we discussed earlier, for a resident, your global income is taxable. So you cannot avoid tax by taking money in the foreign account and not disclosing that foreign account in your income tax return. It is very important you disclose that foreign account as well, because otherwise, if you do not disclose that foreign account and the department catches hold of that foreign account based on the exchange of information between the countries which is happening, then you will be penalized under the Black Money Act, and under Black Money Act, the penalty is very huge. And so it is very important that we disclose all the accounts, whether Indian account or foreign account, and pay tax on it. So signed on at foreign countries, signed off in India, wages received in INR, taxes paid by the company. Do I have to consider these as NRI days? So if you have signed on from foreign country and signed off in India, and you have received, so I am assuming that you have received your salary in NRI account. If you have received salary in NRI account and the taxes have been deducted, which I think the taxes, so then you can claim this particular TDS or the tax back. But if you have received wages in INR into normal savings account and your tax has been deducted by the employer, then you cannot claim this TDS back, because the basic criteria for claiming exemption is that you need to complete NRI days and you need to take your salary in NRI account. So as per the circular of 2017, it is very important that you take your salary in NRI account. That is very much important. If you don't take salary in NRI account, your salary will not be exempt under the Income Tax Act. There is one more question by Mr. Mohit. Is it mandatory to file income tax if we are completing NRI days? Yes. It is very important to complete. It is very important to still file your returns even if you have completed NRI days, because we have seen cases where the department is issuing notices based on the investment that you do. So, for example, if you have completed NRI days and you have earned 25 lakhs in that particular financial year, and you have made an investment into mutual funds, so department is tracking the source of income based on that particular, and they are issuing notices and asking you the source of income. So if you have not filed your return, then it is very difficult, and you have to give reply every time to the department that this is our source of income, and this is your source of income. And so it is very important that you file return and disclose your source of income and be rest assured. So I think we have tried to answer a lot of questions, more questions, but considering in the interest of the time, you all can reach out to us. In case of any query, you can reach out to us via our website, or you can sign up on the website and ask query there, or you can reach out to us on the mobile number which is there on the website, or you can email us your query. So we'll answer those queries as soon as possible. And as everyone know that 31st December is the last date. 31st December 2023 is the last date to file income tax return for financial year 22-23. So post December, you will not be able to file the returns for financial year 22-23. So those who have not filed their returns for financial year 22-23, it is very important that they file their income tax returns before December. And today is 17 December. It's hardly 12-13 days which is left. And I would urge everyone, for those who have not filed returns for financial year 2023, please file your returns in time and be rest assured. Yes. So with this, I would like to close this webinar, and thank you everyone for the patient hearing. And it was such a overwhelming response from all the seafarers, and we are always there as a Seafarers Tax organization. We are always there for seafarers. Any query, anything on taxation or finance needs, we are always on our toes to answer them, and we will serve them in future also. So thank you everyone for this patience hearing and wonderful webinar. We'll send you a feedback link as well, and you all can give the feedback there as well. So yeah.